Yeah, okay. Thank you all for joining in today for this 28th talk in our series organized by Teachers Against the Climate Crisis, TACC. TACC is an organization set up about 3 years ago to promote the understanding and engagement with different facets of the climate crisis, and it has a number of teachers and others, both in India and abroad. I might say that we are not affiliated with any particular political party, and we are also non-funded. A lot of our activity earlier was trying to build a website, build material and certain areas of importance. But over the last 6 months, it's been focusing more on our talks and on engagement and discussion within. And the talk today, which is the transformation of the global energy system, is part of a series of talks that we've been having in recent times around different facets of the energy sector, both in India and abroad. Like a speaker two talks ago had said, the ongoing energy transitions, in fact, it's a very fascinating, exciting time to be in as we are at the start of what may be a long energy transition away from fossil fuels. It's indeed an extremely exciting time, and how it unfolds is something that is of extreme importance to the climate crisis. Also, how different key sectors respond, in particular industry and finance. I mean, we have a situation right now where one of India's biggest coal miners, the Adanis, also is becoming one of the largest owners of renewable energy industry and so on. And also how the financial sector response is extremely crucial to the pace of decarbonization. And whether it is in fact indeed inevitable is something that will be discussed today. To sort of shed greater clarity on these questions, we couldn't have a better person than Mr. Tim Buckley, who is at one of the premier energy institutes, the IEEFA, the Institute of Energy Economics and Financial Analysis, where he's a director of energy finance studies. Tim has been following these issues for at least 30 years, studying financial markets, the electricity sector, and the technology-driven inevitability of a global transition towards lower emissions. He has also lower emission systems. He's also analyzed in detail the risks to potentially stranded fossil fuel assets, as well as the opportunities that the transition enables for renewable energy and energy efficiency and low carbon financial assets. I might add that he's also the co-founder and managing director of ARC Investment Management in Sydney. Thank you, Tim. Welcome, and thank you for agreeing to speak today at the TACC talk. Just a few words about the format. Before I pass it on to Tim, and where in the talk cover different aspects of the energy transition in India, and also varied challenges to the energy transition both in India and abroad, including the scarcity in essential commodity inputs such as lithium, cobalt, and rare, etc. So it's a very wide ambit in today's, something that sounds extremely exciting and something that we're looking forward to. So the broad format would be such that Tim would speak for about 40 or 45 minutes, and after which we open it out for questions and comments, which you could type in the chat box. If you wish to pose a question to Tim directly, you could do so, but I would request you to please indicate so in the chat box, so we could go in the order in which the questions are raised. So thank you again very much for joining us today, and over to you. Thanks again.
Excellent. Thank you very much for that welcome. I will just share my presentation. Right, that's coming through clearly again?
It is, yes.
Excellent, thank you. So also, if I could thank Praveen for the kind invitation to address Teachers Against the Climate Crisis today. It's my pleasure to be here. Could I start by acknowledging I'm coming to you from Sydney, Australia. I live on the lands of the Gadigal people of the Eora Nation, and I accept that sovereignty was never ceded. I would like to discuss the massive ongoing global energy sector transformation, and how, to me, the outcome is very much inevitable. It's also critically overdue given the global climate crisis that is upon us. Now, I am going to put aside the whole issue of climate science. There are plenty of scientists who are far better able to address those issues, the certainty of the science, the urgency of the problem. I'm a finance expert. I'm definitely not a climate scientist. And so I take that as completely as a given. I accept the science, and we need to work on the solutions to the science, what the science is telling us. Now, I'm also going to put aside the topic of a just transition and the common but differentiated responsibilities, which is an absolute core of the Paris Agreement. Neither are my areas of expertise, and I also don't think it's likely to happen. So I think that would require politicians to be leaders, not sheep. And so, yeah, we can maybe put aside those two massive negative topics and outside of my purview today. And therefore, I'll start by saying I'm actually exceptionally optimistic in the areas I'm going to address with you today. So to me, the outcome of the energy transition globally is next to certain. It's inevitable, and it's driven by the combination of technology change, finance, and policy. We have it's critical that we have political policy certainty, and the changes, as I'll outline in the next hour or so, in the last 12 months has given a degree of policy certainty globally, which is critical. And now it's about technology and finance stepping up, taking over innovation. And so to me, the underpinning, and in fact, the core as to why I got involved in this a decade ago was a presumption, whereas now it's almost an absolute fact. Deflation in the renewable energy sector globally in the last decade, particularly in solar, but also in wind, also in batteries, also in electric vehicles. So ongoing massive deflation is the theme that gives me the degree of optimism that I have today. And I also expect deflation to continue over the coming decade, and therefore the transition to accelerate. And again, no way understating the magnitude of the climate crisis, but it's about tipping points. It's about tipping points in finance, tipping points in technology, tipping points in economics and in policy. And I think 2021 was an absolute tipping point globally. We now need to build on that, and we need to see a massive acceleration in activity, but I am pretty confident. Now, financial markets are all about the massive accelerating disruption, accepting that the disruption is accelerating, accepting the inevitability of it. It doesn't have to be upon us right now, but the inevitability of it coming means that finance starts to price in the stranded asset risks, as you mentioned, and then start to factor in the massive opportunities. And so it's the shift in tens or hundreds of trillions of dollars of global capital that gives me the confidence. Now, there are huge technology changes coming. It's the convergence of the transport sector with the power sector is accelerating the global transition. It's the speed of electric vehicle development that I'll come back to in a few minutes. It's the development of green hydrogen, batteries, and wind and solar being deployed at ever greater scale every year. Now, there are plenty of red herrings. Like in Australia, we talk about carbon capture and storage and nuclear and blue hydrogen, all sorts of fig leaves that have absolutely no value. They will not be commercially deployed at scale. They are not part of the solution. They're part of the fossil fuel industry's attempts to distract, deceive, and dismember and constantly delay action on climate change and this transition. So I'll touch on some of those aspects that I've just mentioned here. So I'll also try in the next hour to talk a lot about examples that I've seen just in the last 2 weeks, since the start of 2022. And the reason why I'm doing that is not only has there been a number of major steps forward taken just in the last 2 weeks, but I really wanted to emphasize the point that the transition is accelerating. the inevitability of it from a finance point of view and the acceleration in activity. And so just to illustrate using examples in the last 2 weeks, how the year's barely started and yet there are a huge number of examples how industries are transforming before our eyes. I'll mention a copy of my speech and my slides is available for anyone who wants it. And I'd like to also just acknowledge a couple of my IEEFA India colleagues have joined. So Vibhuti, Swati, Gabrielle, and Shantanu are online. So hopefully they can join in the Q&A and you don't just have to listen to me for the next hour or hour and a half. So to set the agenda, we're going to talk to 4 areas. Firstly, how the economics, policy, and financing of fossil fuels, all of those themes, they're building. Fossil fuels are definitely, in my view, losing the war to renewable energies, to batteries, to electric vehicles. It is a war. We are talking about the livability of our collective planet, and they are losing. And you have to expect that they're going to push back. They continue to push back. Nowhere more so than places like Australia, where we are a massive fossil fuel producer and exporter. So you expect political interference and corporate interference from these companies as they try and delay the inevitable, but it is inevitable. The second area, global finance is pivoting, and I'll just give you some examples of that. The financial risks of climate change are clear. The physical costs of transition, of delay of climate extreme weather events, the cost of stranded assets, but also I think the thing that's driving global finance aggressively now is the magnitude of the opportunity. We are talking literally tens of trillions of dollars of investment opportunity over the next 10, 20, 30 years, and global finance is looking at that and saying, well, let's invest in the solutions. We can make a whole lot of money and be seen to be doing the right thing. Now, put aside morality, banks and finance institutions aren't motivated by morality. They're motivated by making money. But if you show them $1 trillion opportunity, they will jump at the opportunity. And that's what I think is moving global finance. Now, I'll also touch on how India is tracking. I am optimistic. I think India is moving forward. I think the policy framework that Prime Minister Modi has set for India is very ambitious. It is very much what the world needs. It's very much what India needs. And so the policy ambition is clear. I'll also acknowledge, though, that the delivery on those policies to date has been less than satisfactory. We need to see an acceleration of activity, a doubling, a trebling, a quadrupling of activity, but there are some positive signs there. And I'll also throw in a wild card. It's unusual for billionaires to do anything other than act in their total self-interest. But in this case, I think we need to watch people like Gautam Adani and Mukesh Ambani as the magnitude of capital that they can bring to the party is huge, and the opportunities, those investment opportunities I mentioned. So I actually see the pivot by the Reliance Industries group, Mukesh Ambani, as being absolutely pivotal. It puts India absolutely on the center stage. And I would guess one of the changes in 2022, maybe it'll take till 2023, I think we'll see the Adani group jump all in onto renewables. They've already moved aggressively. At the moment, they're trying to walk both sides of the street. And when they move to just investing in the solution, that will be a critical step forward for India. So again, looking at the self-interest of billionaires, potentially for once actually being for the common good. And then finally, I'll touch on some of the challenges in the energy transition, both in terms of for India and globally. And I'll come back to it. At the end of the day, don't expect countries like Australia, Russia, Saudi Arabia to do anything other than dismember, delay, and try and deny the science and disrupt the global politics. But at the end of the day, I am bullish. They will fail. We have to have a livable planet. And I think the solutions are now economically viable. So that's the intro. I will jump into it. So section 1, the economics, the policy, and the financing globally, and how fossil fuels are losing the war to renewable energy. And now this is an Australian chart. I just thought I'd throw it in because I saw it this morning. That is the price of renewable, ACCUs in Australia, so Australian carbon credits, and the price has just gone through the roof in the last 6-12 months. And in fact, even in the last 2 weeks, it's gone up 20-30%. And so we're seeing carbon prices in Australia of 45-55 Aussie dollars, so 35-45 US dollars a tonne. And it was only a year ago the Australian government was issuing these credits at 15 Aussie dollars a tonne. And so that's a sign of how fast the market's changing. That is just a 1-year chart of carbon pricing in Australia. And as I said to you, Australia is a global laggard. And so I think carbon pricing will be one of the top themes of 2022. We've seen it in Europe go through the roof in 2021. And now we've seen China embrace a national ETS. I think we'll see a lot more out of China on the national ETS being broadened, deepened, and expanded, and the pricing going up. And eventually America will jump on board, because at the end of the day, a carbon price is by far the obvious, cheapest way of solving the problem. Put a price on the problem, put a price on carbon emissions, and then stand back and let the industry provide the solution. But starting with net zero emissions pledges. Now, pledges are meaningless unless there is decisive action and political support and courage behind them. But all of the positivity that I'm going to talk to you about now comes, I think, the pivotal point came when President Xi of China announced a peak emissions before 2030 for China and net zero emissions before 2060 for China, the biggest economy, the biggest country in the world. It was followed a week later by 2 developed world countries committing to net zero emissions by 2050, that being Japan and Korea. And to me, that was a critically important milestone. Those 3 countries committing to action on admittedly a 30-year timeframe, way too slow, but setting the political framework, setting the targets, setting the policy direction and the end goal. And now it's all about filling in the detail and making the urgency of the issue for this decade. And I think that aspect stepped up enormously when President Biden was elected at the start of 2021. America, under President Biden, committed to net zero emissions. Sorry, getting a bit of feedback. Maybe if you could mute if you're... Thank you. So President Biden at the start of 2021 set a 2030 interim target for America of a 50 to 52% emissions reduction this decade. And very quickly, we saw then Japan and Korea, South Korea, commit to a 46% reduction this decade and a 40% reduction this decade, respectively. And so that changed the narrative about talking about a 30-year trajectory and started focusing world attention on how we need action this decade. We need credible, aggressive, ambitious targets for this decade. And that's a key milestone. Now, we then saw the IEA in May 2021 come out with the roadmap to net zero by 2050. I think that was a landmark statement and roadmap by the International Energy Agency. The International Energy Agency, I'll criticize them a bit in this presentation, but that report, I think, was a landmark. And the reason why is the IEA is funded largely by the fossil fuel industry and by developed world countries who are the biggest buyers of fossil fuels in the world and producers. But what it outlined was what is required for the world to deliver on net zero. And they came out with a very clear statement, and you couldn't get any more clearer than, for the world to be a livable planet, we cannot afford anywhere in the world the development of any new greenfield oil, gas, or coal developments globally with immediate effect. Now, there was obviously hundreds of pages of detail, but no one can deny today what net zero means. It means no new development of oil, gas, or coal projects anywhere in the world. Now, obviously, that IEA statement's ignoring the common but differentiated responsibilities. It's ignoring the contribution, the overwhelming contribution delivered by developed countries. But I think the IEA statement of May 2021 was a pivotal moment, particularly when you then combine it with the financial statements that came on the back of it. Now, before I get into finance, though, this chart comes from the EIA, which is the Energy Information Administration of the US. What it is, the black line is the actual use of coal up until 2020, which is more than halved in the last decade. And the lines off to the right, the colored lines, were the forecasts in each year by the US government, by the US government's EIA, so not to be confused with the IEA, the International Energy Agency. So the US EIA back in 2010 forecast the plateauing of coal demand. What they didn't forecast was a more than halving of coal demand in just the 2020 decade. It's already occurred. Coal demand in America is down 60%. And what I'm getting at here is that even as the transformation of the US coal power fleet, the US coal mining industry, it was totally upon the American economy, and yet the government was totally unaware of it, and the forecaster was unable to even forecast the decline of the industry as it was happening before their very eyes. So again, beware of any forecast, but what I'm getting at is when you've got fossil fuel incumbents, invariably the forecasts assume fossil fuel use way beyond what really will happen. Now, the flip side of that is this chart, which is about the IEA. This is a dig at the International Energy Agency. This is a chart by Ramez Naam in the US. He's been banging this drum beautifully, highlighting that every year for the last more than decade, the IEA has forecast that solar installs surprise them, and then they forecast that there would installs for the next 10, 20, 30 years would plateau. And then they were surprised again the following year. And then they'd forecast demand would come at that level and plateau thereafter. And for a decade in a row, the IEA got it wrong, and they got it wrong horrifically. And that comes down to the fact that I mentioned at the end of the day, 50% of your funding comes from fossil fuel companies. You're probably going to be wrong when you're making forecasts, because the group think the power of your funding overwhelms the technology, the finance, the facts. And so the IEA forecasts have just been abysmally wrong. They've totally underestimated the exponential growth in solar installs, the massive ongoing double-digit deflation in renewable energy, and that therefore is, in my view, a point of optimism, because the IEA highlights how difficult the road to zero is. They highlight how we can actually do it. But technology innovation coupled with finance means you can actually accelerate it way beyond even the IEA's forecasts. Now, another forecast the IEA's got wrong, but almost everyone's got it wrong, is electric vehicles. So this chart just shows how in the last year, electric vehicle uptake globally has gone through the roof. It's been led by Europe. I just read this morning an article in Europe saying that there were more electric vehicles sales in 2021 than there were, in the last quarter of 2021 than there were diesel car sales in the Europe. Staggering. Electric vehicles were 20% or 19% of all sales, and they outsold diesel cars in Europe. Now, Europe was the home of the diesel car. But what this chart really underestimates, in my view, or I would really want to emphasize, is China is the world leader in electric vehicles. Now, I think everyone in the West has heard of Tesla. Tesla's $1 trillion company. Tesla, in their own right, has done enormous things for making the market globally aware of the power of disruption. $1 trillion company has, and the massive share price outperformance of Tesla has galvanized the US market and the European market. But the reality is it's the BYDs and the CATLs of China who are up 500% in the last 2 years and who are really driving the growth in China. So we saw electric vehicle sales in China up 154% in 2021 in China. In 2021, 154%. So double the global growth rate. China leads the world. And I'll come back to that theme a couple of times. At the end of the day, China is the world's biggest consumer, producer, and importer of coal. They are a big part of the problem, but they're also the biggest investor in the technology and industries of the future. And they're playing a globally globally relevant leadership role in driving decarbonisation industries of the future. So this is just a share price chart. I mean, at the end of the day, you can't read the numbers probably, but the light blue is BYD's share price. In the last 2 years, its shares are up 500%. Its market cap is now $100 billion US. CATL, I mentioned, its market cap's over $200 billion. Its shares are up 500%. Tesla, as we all know, shares are through the roof. So I emphasize this to highlight that the financial markets are now acknowledging electric vehicles have won this war. The internal combustion engine is dead. China says they will stop selling internal combustion engines by 2035, and the financial markets are clearly investing in the solutions. They're backing the solutions. And so I like to use the financial market share price charts, show you what the financial markets really think, because you can only look at what they're actually trading at. And BYD, one of the biggest 3 developers of electric vehicles in the world, one of the industry leaders in China, and its shares have gone through the roof. Now, there was also, just to get into landmark developments in the last 2 weeks, last 2.5 weeks, in China, the SASOC, so the State Administrative, I should get the right, anyway, it's the authority in China that dictates the direction of state-owned enterprises. And they came out on the 30th of December, 2021, with a direction that the 5 biggest utilities in China had to have more than 50% of their total installed electricity capacity as renewable energy by 2025. And so there is one, SPIC is over 50% capacity already renewables, but these are 5 of the biggest 5 utilities in China. They're also 5 of the 5 biggest utilities in the world. And the State-Owned Assets Supervision and Administration Commission has ruled that each of these 5 utilities must have more than 50% of their capacity installed by 2025 as renewable energy. And so that they've got collectively plans to install 350 gigawatts by 2025, these 5 companies in renewables. 350 gigawatts. By comparison, India's total market of installed capacity today is 390 gigawatts, and they're going to more than double that investment in the next 3-4 years. So it's amazing to watch China move. The Chinese president has spoken, and 5 of the 5 biggest utilities in the world are now going to implement the directions of their president, and that will show why I consider China to be an absolute world leader. And I should say, again, given we're talking about India here as well, India's NTPC currently has 90% capacity as thermal power today, but back in June 2021, NTPC announced plans to have 60 gigawatts of renewable energy by 2030. And so NTPC is doing an extraordinary pivot in their strategy over this decade, and they are very much looking to embrace the opportunity to deliver domestic, zero emissions, cheap power for all of India. And so there are parallels. India is definitely replicating in its own context the lessons that have come out of China in the last decade. And so we're watching NTPC very, very closely as well. South Korea, just to pivot to another one of the top 10 economies in the world. I mentioned their pledge to net zero by 2050. They're pledged to do a 40% cut by 2030 in emissions. And then back in October last year, they pledged to phase out coal entirely by 2050. And so President Moon Jae-in has been moving South Korea really, really aggressively. South Korea is the 2nd largest buyer of fossil fuels from my country, Australia, second only to Japan. And so I watched Japan and Korea showing global climate leadership and committing, and then the substance coming through behind the scenes. So moving on to section 2, global finance is absolutely pivoting. Now, they're pivoting away from stranded assets and they're pivoting towards the opportunity. Now, at the end of this chart, again, just came out last week, and it's from an insurance company. It's showing the magnitude of US weather and climate disaster events and the magnitude of the cost to the economy. So in my country, a fossil fuel country, we talk, or our politicians talk, oh, the cost of action's too high. What this chart's clearly showing is the cost to the community, to the economy of inaction is way too high. The data is real, it's there, it's clear, and everyone in finance can see it. They don't take the political spin from politicians or coal lobbyists. They look at what the facts are. And so renewable energy, lithium ion, massive deflation. It's been ongoing. Now you'll see I have deliberately used this for the end of 2020. We have seen a spike in solar costs in the last 12 months. We've seen a spike in every commodity in the last 12 months, but put that aside for a minute. Look at the long-term direction. I've been using a version of this chart for every presentation I've given in a decade, and the massive ongoing deflation of solar in particular, but also wind is extreme. More recently, the deflation in batteries is extreme. The example I've put there, we saw back, back pre-COVID virtually, November 2020, we saw Indian solar costs drop to 2 rupees a kilowatt hour, down 18% year on year. To me, the key number there is the levelized cost of energy is below $20 a megawatt hour. So India has some of the lowest cost solar in the world, and it has seen for a decade more than 10% annual deflation. Now, those trends have been replicated in Portugal, in Spain, in Australia, in America, in Germany, even in Japan more recently, and China. And so deflation is absolutely clear. It's my forecast, it's IEEFA's forecast that deflation over the next decade will accelerate, and we will see a blip. The blip might be 6 months, it might be 18 months because of this massive commodity price surge we've seen in the last 12 months. So solar prices didn't drop in 2021. I think we'll resume the deflationary trend by the end of 2022. But it's worth bearing in mind the LNG price went up not 10%, 20%, it went up tenfold in 2021. A lot of the inflation we're seeing in energy prices globally, almost all of it, is coming from fossil fuel commodity inflation. And so let's go back to it. At the end of the day, why am I really bullish on the long term? It's because I expect a decade of deflation. Don't underestimate the power of learning curves in renewables. And I'll come back to that point. So to stress why net zero pledges are so important, we've seen in November 2021 and in the COP26, we saw the UN-sponsored Net Zero Finance Alliance for 1.5 degrees reach $130 trillion of global capital committing to net zero emissions. Now, they've pledged to net zero emissions, but these pledges have been signed off by the boards of more than half of the world's capital system. So the boards have committed to it. Now it's about holding their feet to the fire and making them deliver on the interim target, deliver on their pledge. But it's pretty phenomenal when you've seen global finance with $130 trillion of collective assets under management in banks and in insurers commit to net zero emissions. And they didn't commit just to Paris, 2 degrees, they committed to 1.5 degrees. So I am pretty bullish on that. Give you 2 examples of it. One, we'll see BlackRock 2 years ago was very much a global climate laggard. BlackRock has pledged to 1.5 degrees. They've pledged to net zero emissions. We're going to see Larry Fink, the CEO of BlackRock's new 2022 speech to all CEOs in 2 weeks' time. I think that letter is going to be a clear standout. It's going to be crystal clear. The demands of BlackRock, which is a $10 trillion global giant, $10 trillion of assets under management, and BlackRock's telling every significant CEO in the world, you're going to have, for BlackRock to continue to invest in you, to endorse you as a company, you're going to have to commit to net zero emissions by 2050. You're going to have to commit to interim 2030 pledges. You're going to have to demonstrate a path to that 2030 target. You're going to have to commit to science-based target initiative verification. You're going to have to commit to international sustainability standards boards disclosures, so there's transparency. And when a $10 trillion company that's an investor, it owns 5% on average of every company in the world, when they tell you you've got to do something, it will have to happen. We've also seen Vanguard just last week. Now, Vanguard's been a global climate laggard that makes BlackRock look good, but Vanguard last week came out with their new sustainability statement. They committed to action on climate change. They committed to the UN net zero emissions pledge, and they came out and they put every fossil fuel board member under advisement. They said they will vote against you. Now, not till 2023, next year. They're giving them a year's leeway. They don't deserve a year's leeway. They need urgent action today. But anyway, Vanguard's a global laggard, but they have warned now in writing in the Harvard Business Review last week, every CEO of every fossil fuel company has been advised the boards will be voted against by Vanguard if they don't act on climate. Now, okay, we need to see Vanguard actually walk the walk, but we at IEEFA have been tracking fossil fuel and particularly coal exit pledges, policy statements behind those pledges. There are now 190 globally significant financial institutions with policy statements committing to exit, divest coal or coal power. And so those policy statements have grown. There were 16% more new or improved policy statements in 2021 than there were in 2020. And when you combine that with the net zero emissions pledges, these financial institutions, as I said, they have to walk the walk, but we are increasingly seeing that happen. Now, another landmark decision by China came out 4 months ago. President Xi came out and committed that China will no longer build coal-fired power plants anywhere abroad. Now, given China was probably financing the majority of all new coal power plants in the world in the last decade, for President Xi to come out and commit that they will no longer fund new coal anywhere outside of China, anywhere abroad, I think that's a landmark decision. Now, 3 days later, we saw Bank of China, which individually was probably the biggest financier of coal power in the last decade in the world, and they committed with immediate effect to no longer financing new coal abroad as well. So again, maybe just to use a share price chart, this chart shows to me global finance is moving, and it's moving aggressively. Just for a little bit of American context, the green is next era energy. It's one of my favorite energy company in the world. You can see it's massively outperformed the US market in the last decade. It's up 456% in a decade. The US market's up 274%. Now, it's the biggest utility in America, and it's also the biggest investor in renewables in the world every year for the last 15 years. It spent $15 billion just last year alone. And so next year energy massively outperforming, and the red is Exxon. In a decade, Exxon has underperformed massively. Its shares in absolute terms are down 16-17% in a decade. Even in 2021 with record high LNG prices, oil prices going up aggressively, okay, they recovered a little bit of ground, but on a decade view, massive ongoing underperformance by Exxon, the biggest climate dinosaur in the world. And so at the end of the day, finance is all about performance. Renewables are outperforming, fossil fuels are underperforming, fossil fuels are a wealth hazard. Now, Australia, I won't make a lot of this talk about Australia, but one of the big changes in 2021 in Australia, even the federal government of Australia, funded by fossil fuel companies, sponsored by fossil fuel companies, and yet the federal minister, Keith Pitt, actually highlighted that the offshore oil and gas industry had a $76 billion unfunded cleanup bill. And what Keith Pitt realized was that if he allows the fossil fuel companies to go bankrupt, if he allows them to leave Australia, there is no funding, there's no provisioning, there is no government clawback of that $76 billion. So it'll end up being Australian taxpayers who end up funding it if people like Exxon leave Australia. So Keith Pitt actually wrote to Exxon's CEO, Darren Woods, and said, you cannot sell out of Australia, which Woods was preparing to do, until you've actually cleaned up the mess you created in our country. So Australia, by no means a world leader at the political level, but the cost of the exit of stranded assets in fossil fuels, in this case in LNG, oil and gas, is huge. And that is something that's even motivating the Australian government, a global climate science laggard. And then another chart just to finish on finance. ESG debt issuance. This is an article from Bloomberg last week talking about how ESG debt issuance globally more than doubled in 2021. So global finance is moving, $1.6 trillion of ESG funding. Now, it's critical that we saw in the last month. Now, there's plenty of greenwash going on, but one of the big changes came through just in the last month. We saw the US Office of the Comptroller of the Currency, right, a bit of a mouthful, but that is the OCC as an abbreviation. They released a draft supervisory guidance on how US banks have to manage risks relating to climate change. Now, one of the warnings the OCC gave was about investor deception on greenwashing. The OCC tells banks that when they publicly communicate their climate-related strategies, boards and management must make sure those commitments are consistent with their internal strategies. Now, I'm reading straight from the OCC report that came out 2 weeks ago, and the OCC follows similar warnings by the US SEC, Securities Exchange Commission, and the US Treasury's Financial Stability Oversight Council. So we've had 3 different key regulators in America in the last couple of months come out with major warnings about climate change and how investor deception is going to be prosecuted by the US government. Now, in my country, when ASIC speaks, no one cares, no one listens to them, they never win a court case. But when the SEC holds the keys to the world's largest financial markets, when the SEC speaks, when the US Treasury speaks, when the US OCC speaks, global investors listen. Now, interestingly, last week, President Biden had a win. Sarah Bloom Raskin was appointed as the Federal Reserve Vice Chair of Supervision, one of the most powerful supervisory roles in the Federal Reserve in America's government. And the climate hawks are saying she will be very aggressively pushing the Federal Reserve to act on climate change. So the US has a long way to catch up to the Chinese, but we are starting under President Biden to see action. Now, in the last 5-10 minutes, I'll just finish speaking about, I'll talk about India and how India is tracking. Now, I remain very optimistic about India towards energy independence. And that's what Prime Minister Modi talks about. He talks, as you might recall, in his National Day speech last year, he talked about how India had to aspire by 2047 to energy independence, to cease reliance on fossil fuel imports. And that is the critical issue. Energy security drives every government in the world. And at the end of the day, Prime Minister Modi is driven by the economics. India can't grow its economy sustainably at the GDP growth rates that the government of India is aspiring to if it's got the massive headwind of massive fossil fuel imports every year. The faster you grow the economy, the faster you grow reliance on fossil fuel imports, unless you invest in domestic zero emissions alternatives. And that's what Prime Minister Modi has set. So his target, 450 gigawatts of renewables by 2030, 500 gigawatts including hydro. It implies a quadrupling of activity of investments against the current installed renewable energy capacity of just over 105 gigawatts as of December 2021. So a quadrupling of investments just in the next 9 years, that means a massive acceleration in activity. But 2021-22, we have seen renewable energy installs. At IEEFA, we're forecasting 15 gigawatts of renewable installs, a doubling relative to the last 3-year average. And we expect that to accelerate again. And at the end of the day, it's people like NTPC, National Thermal Power Corporation, changed its name to NTPC to flag how it's moving away from thermal power to energy development. I mentioned its target 60 gigawatts by 2030, and NTPC is very much investing and targeting growth. Wild cards, as I mentioned, to watch are bizarrely, as I mentioned, the two billionaires of India, Reliance and Adani. Like Twiggy Forrest in Australia, the founder and chair of Fortescue Metals, the richest men in Asia are now fighting over the $1 trillion investment opportunity that decarbonisation brings. Fortescue Industries in my country will invest $400, $500, $600 million just this year alone in green hydrogen and zero emissions research, development and deployment as part of their corporate pledge to net zero emissions by 2030 on scope 1, scope 2, and 2040 by scope 3. And I see Reliance Industries as having made the same sort of level of commitment in India. And we've seen, there was a really interesting Fortune article, I think it was, came out last week saying 6 transactions by Reliance Industries in 6 months shows Reliance Industries pledged to invest and enable $100 billion of investment in renewables in India by 2030 is very much on track. They are accelerating their deployment. And interestingly, they're going around the world and buying the world's best new breakthrough technologies. And I see that as their intent. They're securing access to technology in Europe and in America in order to bring it home to India and then deploy it at enormous scale to take on China in this global technology race and to deploy it in India and build capacity that's been unprecedented. So I'm watching the billionaires of India. I'm hoping Adani looks at Reliance, looks at the opportunity and realizes they can't walk both sides of the street. So my hope is that Adani also makes a pledge, no new coal power, hopefully in 2022, maybe to take them till 2023. But at the end of the day, Adani, like Reliance, is very critically dependent on global capital. Global capital's moving, and so it's in the billionaires' interest, their own self-interest, to actually seize these opportunities, deploy capital to scale unprecedented in Indian history, and that will drive decarbonisation and deflation. So it'll benefit every Indian. It will also reduce India's massive fossil fuel import bill. So there are all sorts of opportunities, and so we're watching Reliance Industries as a leader in India. Just finishing up, I've probably gone a bit over time, so I'll try and do this section quickly. The energy transition challenges. There are plenty of challenges. I'm trying to present an optimistic view. I acknowledge it's optimistic. I look at pivot points, turning points. We have to see a massive acceleration of capital investment globally. But when hundreds of trillions of dollars of global capital is now searching out for the opportunities, when Blackstone, one of the biggest private equity fund managers in America, just this week announced a $3 billion renewable energy investment in America, we're seeing the global finance pivot and to seize the opportunity. So one of the big issues, actually, before I move on to CCS, one of the big issues in India, in decarbonisation is new commodity scarcity. Lithium, cobalt, copper, nickel, rare earths, they're going to be used in huge amounts, bigger volumes in a electrified economy than they were in the last decade. So the whole push to electric vehicles, to batteries, to electrification of everything, will see a surge in demand in new commodities. And that means we are seeing a global energy system rebuild at speed, a redesign and rebuild at speed. Extreme commodity price inflation was evident across the board in 2021. mostly on the back of surging fossil fuel prices, but a lot of these new age commodities moved up aggressively as well. And so there is a bit of an inflation headwind as we enter 2022, but we need to see a massive step up in investment capacity, and that's what I'm expecting will occur. And that McKinsey talked, for example, they put out a report last week talking about how battery demand globally is going to grow 20 or 30% annually, and that will see the global battery market reach $360 to $410 billion a year by 2030. That's a massive shift versus where we are today. There will be strains on supply chains, and so there will be some challenges on the back of that. One of the big talking points in Australia, talking points in America, talking points in Korea and Japan, when countries pledge to net zero, when they pledge to a 30, 40, 50% emissions reduction, the fossil fuel companies aren't just going to stand there and accept that they're in terminal decline. So one of their fig leaves that they talk about is carbon capture and storage. It is an absolute fig leaf. This chart from the IEA, it was on the IEA website for a year. They pulled it off because the Carbon Capture and Storage Institute didn't like the connotation. The bottom line, the one you can't see, the dotted line at the bottom is the CCS reality. It's 100% off track. Last year, very fittingly, the $7.5 billion Kemper facility, a CCUS facility, was demolished. It was literally blown up as a failure. Taxpayers in America, ratepayers in America funded that $7.5 billion, and it was a total failure. So CCS, you'll hear a lot of platitudes about it. There is no such thing as blue hydrogen. It is fossil hydrogen with CCS, where CCS is unproven. So we've got to be aware of the spin. Now, green hydrogen, I think, is going to play a key role, but it's not going to play the leading role. The key role is electrification of everything, wind and solar being deployed at scale that's unprecedented, but there is going to be a key role to decarbonize heavy industries, and hydrogen will play a role in that. So this is just a financial press review talking on one hand, Twiggy Forrest, the richest man in Australia, saying he's all in on green hydrogen, and then our biggest fertilizer and explosives company, Incitec Pivot, saying it's not going to be commercial for another 2 decades. So at the moment, that's in the hiatus we're in. Green hydrogen is not commercially viable. It won't be for a decade, but it is going to disrupt massive industries in the process of that commercialization. And so it's interesting watching Australia's richest man be all in on that and spending hundreds of millions of dollars to actually deploy green hydrogen, even though it's a decade away from commercialization. And Ambani and Adani are both committing to the same thing in India. So we will see new technologies coming through. And I'll just finish on one comment, which in Australia, I mentioned Australia as a global laggard, but in many respects, the industry and investments happening anyway. And this was a statement by the chair or then chair of the Energy Security Board of Australia, saying coal power in Australia will exit by 2035 or sooner, a decade or two faster than the government and the regulator was planning. And we've seen an acceleration in that. The integrated system plans come out, draft for 2022, and the green line was 2 years ago a absolute outlier scenario. Now it's the mainstream scenario in Australia. That renewable energy we saw in South Australia. Every day we were seeing 100%. In 2 weeks ago, we were seeing 100% penetration of variable renewable energy every day in South Australia. Not only a small state, but it's a litmus test of the world. People have for decades been saying you can't get 100% renewable energy. South Australia has no hydro. It closed its last coal plant 45 years ago, and yet it's now regularly seeing 100% variable renewable energy, and they're not getting too many blackouts. So just to prove the technology is happening and show that Australia does have some world-leading characteristics. So there's, to me, huge lessons that can come out of the development, particularly of rooftop solar, but also utility scale solar in Australia for the world. So Australia, a global laggard, but also some aspects global leadership. So I will stop there, and I'd be delighted to take questions.
Yeah, hi. Thank you, Tim, for a presentation that was remarkably wide in its scope and what it covered. I mean, it was very obvious your talk is the advantage of having someone who has followed these areas and sectors and issues for 30 years, can see trends clearly that may not be visible to many of us. And also, what is also very striking in the presentation was the sheer scope of what was covered in the sectors, questions of finance, questions of other sectors other than electricity, transport, batteries, and so on. But also centrally, how money is so central to the transition, and Tim being able to have followed for years exactly the way in which money is sort of following, responding to the transition. Also, I just finally say this, it's also quite encouraging, about Tim's presentation, in a sense, talking about the pace at which the energy transition is taking place, based on what he's observed for the last few years, is certainly one of the more encouraging talks that we've had, and certainly something which is bolstering for all of us. I will now, like I said in the chat box, request all to put your questions in the chat box. And if you wish to ask Tim a question yourself directly, kindly do so. But first, just indicate so we can go in the order in which the questions have come. I think we already have some people who raised their hands. I think Chirag said that he wished to ask a question. Do go ahead, Chirag, before we go on to Nupur's question. And I will myself come in later with a couple of observations for Tim. Thank you. Yeah, Chirag, please go ahead.
Thanks, Naga, and thanks, Tim.
Just one moment, Chirag. I would just request that when someone's speaking, I request everybody else to keep the mic when Tim is responding, so we don't have sort of an order. Yeah, thank you very much. Yeah, Chirag, please go ahead, please.
Thanks, Tim. That was a great talk. Really enjoyed hearing it, and that was a lot of data. So that's going to be, and since you're sharing the slides with us, that's going to be very useful to all of us, I think. So my question is this. Fossil fuels have been cheap for so long. One of the reasons is that its impacts have been externalized, climate impacts, but also air pollution impacts and so on. Now, renewables have been falling dramatically. But then, as you pointed out as well, a lot of the demand for rare earths has been spiking because of the new technologies, the electrification and so on. Now, that could be copper, silver, zinc, tellurium, magnesium, and so on. Now, each of these comes with its own impact. So in terms of mining the ore and processing the ore and the use of the metals, finally their disposal. Now, given that the carbon tax has been proposed as a way of sort of holding fossil fuels, of making them responsible for their impacts, could one then think of, let's say, a rare earth tax, something to make renewables and this push for electrification responsible for its impacts? And if one were to do that, and this could also be seen as a push towards a circular economy, you want to create fewer impacts, you tax them so that there is more incentive to develop those technologies. But if one did that, do you have any thoughts on what that could mean for climate action? I mean, firstly, would that even be sensible, an idea of that sort? And if there was any merit to it, how would that impact action, mitigation, and so on?
Sarah, thanks very much for that question. I'm not a circular economy expert. I'm a finance expert, so I'm in dangerous territory there. But I accept your point 100%. I mean, as I said in my presentation, and as I think one of the key themes of 2021-22 was the carbon price, as you said, the fact that the EU carbon price has gone from literally 30 euros to 90 euros, and now it's at 80. The Australian carbon price has trebled in the space of 18 months. So internalising the cost of fossil fuels is absolutely key. That is the low-cost way of driving this decarbonisation. Level the playing field and then let the best technology win. So I accept that comment. We are going to see the development of new supply chains. That will take time. There will be a delay. People have underestimated electric vehicle uptake. So we do have shortages. And I do think, as you said, a circular economy is absolutely key. It's key for the sustainability of our planet. It's not specific to renewable energies, but the very speed of the transformation means that there is going to be shortages of cobalt, of copper, of nickel, of rare earths, of lithium. But I was investing in China 12 years ago, and I mean, maybe it's a slight, well, it's one aspect of the answer I'd give you to your question. China has probably 60, 70, 80% of 90% of the world's rare earth processing, 60+% of the world's lithium. It dominates the processing of all of these commodities of the future. They are very, very far forward looking, unlike a lot of Western countries. And anyway, for a little while, the rare earth price, we saw this expectation that rare earth demand was going to go through the roof back in 2009, 2010. So we're talking 13 years ago. The price went through the roof. It went up 10-fold, 20-fold, 30-fold. Now, at the time, I was an investor in the sector and we made a huge amount of money. But everyone was saying to me, oh, this will just destroy the transformation because China's just gaming it and profiteering. What they missed was China is very, very forward thinking. Okay, I'm advocating China's forward thinking on the energy decarbonization. I'm not talking about their political system, but just as it relates to energy, they're very forward thinking. They did not want the rare earth price going up 20-fold. And so what they did was they massively invested in new capacity to drive the price back down to where it was. And so 2 years later, the price was actually lower than where it started at. And everyone in the West is going, why wouldn't the Chinese have screwed us? They control the market globally, they control the supply. And what everyone ignored was the fact that China was the biggest buyer of rare earths in the world. They want to gain market share. They want to encourage deployment because they dominate this industry and they want the industry to grow tenfold. And you don't grow an industry by crippling it with massive price inflation. And we've seen the massive deflation in solar very much driven by the Chinese. Whenever the price of solar modules goes up, the Chinese open another 5 factories, they flood the market with new supply, and they crush the price. Now, the West and India have both claimed that that's anti-competitiveness, but it's to the world's benefit that the price of solar modules goes down every year. China's driven that. So I'll finish by saying it is absolutely critical as finance comes in and helps solve the money problem, the investment problem, that we and your organization and lots of other NGOs campaign for a push to a circular economy and for closed loop development. We've got the opportunity to make solar, batteries, electric vehicles closed loop. We critically must do it. At the end of the day, there is a finite number of resources in the world, and we need to actually use them sparingly, and we need to recycle. I will emphasize lead acid batteries have very, very high recycling rates. Why? Because the lead is valuable. At the end of the day, the vast majority of the lead used every year in the world comes from recycled batteries. Now, we've got to make sure those same principles are adopted, that solar modules are recycled, that batteries are recycled, steel is recycled. And so I'm all for a sustainable economy. Finance won't be the driver of that. Unfortunately, communities have to pressure governments to give the regulatory framework for it.
So, yeah, before we get to the question from Nupur, there are a couple of observations and a question which are perhaps slightly outside the frame of your presentation, Tim, but I'll still put them to you. There's more like an observation from Alka, who says that the Indian government in particular needs to have its environmental policy embedded now in its social policy. And she underlines the fact that the energy transition needs to also include issues such as rehabilitation of those working and the re-employment of those who are currently working in the fossil fuel industry. And below that, Sonali brings in the question of biodiversity and also about the central question of non-human actors, non-human species, and the tremendous heartbreaking loss of biodiversity, not least in Australia. Are they anywhere on the map? So would you like to respond to those, Tim, even though I realize they're outside the frame of the presentation, but would you like to respond before we go back to other questions by others? Yeah.
Yeah, as I mentioned at the start, I'm a finance expert, and I 100% accept the question, the statement, or it's not a question so much as a statement. The biodiversity loss is horrifying. It's dreadful. It's ongoing. It's accelerating, and climate change will make that worse. But it's absolutely outside my area of expertise. Yeah, the fires. I mean, there were reports that literally 2 or 3 billion Australian animals were burnt to death in our bushfires 18 months ago. I mean, it's just horrible when you think about it. I try to avoid thinking about it. I accept the science. I accept we've got to act on it. But yeah, I don't want to demoralize everyone by talking too much about all the negatives. They're very obvious to all of us. On the question of India's government environmental policies, absolutely. Like every industrial activity has downfalls. I accept that. Solar, absolutely. Wind, absolutely. Electric vehicles, they all, manufacturing, any sort of activity, economic, industrial activity has consequences. We need stronger environmental policy frameworks, without doubt. And I mean, at the moment, you can build solar in India without even having to do an environmental impact statement. That is not acceptable. That's not sustainable. But the question is, how many battles do you choose to fight? IEEFA's battle is very much about finance and driving finance to look at the opportunities to invest and drive the solutions. Other actors are going to have to push governments to hold industry to better account. We're going to have to hold our politicians to better account, and we've got to stop the erosion of biodiversity. So I do love the way India actually has a reforestation pledge, like China. Australia doesn't even bother giving that lip service. We're constantly destroying our forests. We need to protect the forests. I accept that, but it's outside my domain. One policy frame, again, I sometimes get accused of being too pro-China. It was interesting watching the 5-year review. Remember, China pledged, they had horrific air pollution 5 years ago, and Larry Murtaugh of CERA came out with a presentation last week highlighting 5 years on from President Xi's pledge to clean air and green, it was blue skies and green water. China's air pollution, particulate pollution, has dropped dramatically sustainably. Now, it's still at critical levels. It's still got to drop dramatically further, but we've now had 5 years of firm government policy imperative to actually make the air breathable in China. I think everyone in India knows that's a critical issue the Indian government's been asleep at the wheel on. But again, who's the biggest problem child in that area? Fossil fuels. So as we address fossil fuel use, particulate pollution, carbon dioxide pollution, nitrous oxide, all of those issues have to be dealt with. So unfortunately, I'm only addressing part of the wider issue that those two questions asked about. They're all critical. I accept them 100%.
Thank you, Tim. Now we'll take Nupu's question, and then I'll come in with a couple of observations of my own. Nupu's asked an interesting question about the pressure of heat, etc., presumably possibly caused by climate change on grid systems. And she gives the example of Argentina. She says we're seeing a lot of heavy infrastructure failure in various parts of the world. And how safe or adaptable is our energy infrastructure in a changing climate?
Yeah, I haven't seen the Brazilian example, but we saw that only 2 days ago in Australia. I think it was Melbourne, we hit a heat of 50 degrees. Now, you in Delhi see that quite regularly, but that was unprecedented in Australia. And in fact, I was talking to a pilot yesterday, and helicopters can't fly in Australia. Legally, they're constrained from flying if the temperature goes above 50 degrees. And so, yeah, all of the helicopters in the Pilbara were actually grounded because of heat stress already. And that's how we started 2022. We haven't seen anything yet. It's only going to get worse over time. So I totally accept that. The impact on the grid, again, the fossil fuel industry talks about renewables being intermittent and unreliable. What they fail to mention is that in Australia, our coal-fired power plants can't operate in extreme weather events. They're actually really old coal-fired power plants. They're aging, and heat stress means that they actually have higher failure rates in extreme temperatures. You have the same issue in India. And obviously water stress is another issue. So heat, absolutely underestimated. I accept the question 100%. I think water stress is massively underestimated. IEEFA did do a paper on that a year or two ago. It's outside of our main area. But if you think about it, coal power plants, coal mining, nuclear power plants are all extremely water intensive. Water scarcity is as big an issue as air pollution in India, and it'll only get worse. The heat, absolutely. So I agree, all of these reasons, it's going to get worse before it gets better. That's why I said I'm putting all the negative issues aside. When I talk optimistically, I talk about the inevitability of us winning this war. The alternative is an unlivable planet, so we have to win. But yes, will it get worse before it gets better? Absolutely. That's what the science is telling us.
Thank you, Tim. So I had a couple of questions, Tim, a couple of broader questions, but one very specific question relating to data sources. You mentioned and critiqued the IEA's projections of solar. Now, valid as that part might be regarding the projections, regarding their data presented of what's happened in the recent past, is that more reliable? I mean, is, for instance, IEA's data for 2019 sort of reliable data in terms of what they're present, as opposed to their projections in terms of their curves regarding solar and wind? So one is my question of what is a reliable data source that we as teachers or academics or activists and writers can tap reliably. That's one. But my two broader questions are, one regarding natural gas, which is talked about a lot as a transition fuel, as a central in the energy transition. And all forecasts suggest actually a rise of gas. And in fact, you mentioned the US going away from coal. Partly the US has been able to do that, as you know, because of their massive discovery of shale gas, etc. And in fact, it's rising. In fact, as US has become the largest exporter of oil and gas in the world, as you know, changing the energy markets dynamics worldwide. That's one regarding. And is it in fact, if I may sort of be on a limb a bit, is it in fact slightly desirable from a climate perspective for gas to take the space of where otherwise coal might have been? I mean, even in India, even though gas is only 6% of India's energy basket, it's actually perhaps more desirable for India to have a larger gas infrastructure than be so dependent on coal as we are, because gas, as you know, can be used in varied kinds of applications. My second broad question relates to China. And again, you're completely right that China has pledged to stop financing coal projects abroad and made a number of significant pledges internally. Having said that, though, China's coal consumption actually rose last year, it appears. It didn't fall as much as was expected. And because of being more cold or because of supply issues, etc., China actually, its expansion, its investment in its capacity is still tens of gigawatts, as you know. So is it a kind of zigzag kind of transition? And given the scale at which China operates, I mean, China consumes some 4,000 million tons of coal, half the world's coal, 53% of the world's coal, etc. What China does, as you know, is so significant. So even though there's this huge expansion of renewables in China, what they're doing with coal is so central and so important in the margins, because the pace at which we shift away from coal and gas and oil is central. It's not just the share that needs to reduce, but also in absolute terms, for it to have an impact on climate change and the levels of carbon dioxide in the atmosphere. So could you just comment on actually how, in a sense, coal in China also seems to be perhaps at the moment maybe more resilient than one may realize. Yeah. So yeah, thank you.
Okay. Three very important areas. So just to go through each of them, data sources and the IEA. You're right, I have critiqued the IEA, and I've been critiquing them for a decade. I think under Fatih Birol's leadership over the last 2, 3, 4 years, he took over as CEO about 3 years ago, he's made huge strides there. And I do use the IEA, I read everything they write. It is peer reviewed. It's at the end of the day, it's easy to throw rocks, but they do some phenomenally good work. What I critique is the fact that half of their funding comes from fossil fuel firms And so when your funding comes from fossil fuel firms, it's very hard for you to be anything but biased by that. They're not independent. So that's, and then the Australian government, the American government funds them. So it's not like the Australian government's independent of fossil fuel companies. So that influence is there. It's there in everything. And that's why they've been missing the speed of transformation. But getting back to your question, I do use their historic data. It is reliable, absolutely. I think they've improved their game dramatically. Like one of my big critiques of Fatty Birrell 3 years ago was that IEA did not have any staff in India or China. And he responded, well, India and China don't fund us. I go, yeah, but how can you study the world's coal industry where 60% of the world's coal is produced and consumed in India and China, and you don't have any staff on the ground there? Now, he has addressed that. He's opened offices in both countries. He has done major landmark studies, and a shout out on the positive. IEA India's 2021 report was excellent. It was superb. It was forward-looking. It was the first detailed review the IEA's done, and it was superb. It was more aggressive. I can see on Zoom, we've got Vibhuti Garg, our head of India, more aggressive than Vibhuti's forecasts in terms of the uptake of the decarbonisation of India's system. I think the IEA is really, really lifted their game. When you look at their forecast for 1.5 degrees, but their core scenario, their central scenario, assumes an unlivable planet. Now, none of us know, we can't live on an unlivable planet. You in India know that. The heat question we just had was proves that the heat will kill us. So at the end of the day, the IEA scenarios, the 1.5 degree scenario, I think it's still gilding the lily a bit. It assumes CCS still works. It assumes blue hydrogen works. Okay, they're going to be proven to be wrong, but the IEA has improved dramatically. Use their scenarios, the 1.5 degree scenario. It's credible. It's the best we've got. I just am optimistic that they have underestimated the rate of change yet again. Second question, natural gas. It has for a decade been called a transition fuel. The IEA has written papers a decade ago saying gas is a transition fuel. A decade ago, that was correct. 2022, we've got a climate crisis. Everyone on this call knows we've got a climate crisis. As IEEFA's lead Australian gas analyst says, more fossil fuels does not reduce emissions in any sense of the word. More is not less. We need to reduce emissions. We need to reduce them aggressively. We cannot afford more emissions. So I hear you on, it is a more legitimate question in India than it is in Australia or the OECD. Common but differentiated responsibilities, but I'd also argue it's a flawed logic. It's the IEA who is pushing fossil gas, methane gas, as a transition fuel on behalf of Exxon and on behalf of the fossil gas companies. So again, look at why they were writing about it, why the framing, and go back to the facts. At the end of the day, I think one of the big themes of 2021 and more so in 2022 is the disastrous rise in global methane emissions. Again, I'm not a scientist, but methane is gas, methane gas, fossil gas, sometimes called natural gas by the fossil fuel companies. We all take their spin advisedly. But methane gas, a quarter of the world's emissions, and they accelerated at the fastest rate in world history in 2020. They accelerated again in 2021. Methane gas is not a solution. And if India goes and invests in methane gas or natural gas, the natural gas price, the LNG price just went up tenfold last year. So you'll be importing massive amounts of fossil fuel inflation. And IEEFA India has actually just expanded our coverage. I saw Swati is online and Puva's joined IEEFA. So IEEFA India is going to be covering the gas industry, really to raise that question, because I think the Indian government's been fed a lie by the IEA and by the gas industry globally, that gas is a transition fuel. It's not part of the solution. It's the core part of the problem. And when you take into account methane emissions across the whole supply chain, it's definitely just as bad as coal. You can't just consider gas versus coal at the point of combustion. You've got to look at the whole supply chain. And of course, the fossil fuel industry and the gas industry never talks about the supply chain. And in the US, you're dead right. The US move away from coal a decade ago was very much primarily driven by gas. But if you look at it over the last 5 years, there were 3 drivers. Number one, energy efficiency, not even on my chart. Energy efficiency, the US GDP has been, economic growth has been 3% per annum for a decade. Electricity demand's been flatlining in America for a decade. So energy efficiency was the number one driver of decarbonisation of the US energy system. Number 2 was renewable energy, and then gas was a major driver. But it's worth bearing in mind, President Biden has committed to 100% decarbonise the US electricity grid by 2035, 13 years from now. You cannot build a new gas-fired power plant and decarbonise the grid, according to the President of America. He's writing the energy policy of America today, and I think you'll find gas will not be the transition fuel that the US gas industry has been spinning for a decade that it is. Finally, on China and coal, yeah, I accept China is 53% of the world's coal consumption. China is by no means an angel as a country. It's a developed world country, economy. It's got 1.4 billion people. It's got a massive economy, and it has huge coal reserves, and it uses a huge amount of coal. So without doubt, China is a story of 2 sides. The negative side, they're the biggest coal user in the world by a mile. Like 4 times the size of India, the second biggest user of coal in the world. China's got a long, long way to go, but they are at least setting the goalposts, and they have stated the objective. The president of China has stated the objective, and beware not if you fail to implement the thoughts of President Xi in China. Now, I will emphasize China's coal consumption peaked in 2013. That's often missed. You asked the question about coal consumption went up last year. It did. It's almost back to the peak, but it actually peaked in 2013. And let me finish on one point. I think China will double or treble or quadruple its solar installs annually in the next 3 to 4 years, just as India will, just as America needs to, and just as Australia will. The reason why I say that, though, Chinese, Kashish Shah, one of my colleagues in India, sent around an article from last week highlighting how China's manufacturing of polysilicon, which polysilicon is the raw material for solar modules, China will double the world's polysilicon production this year, and then they'll double it again by 2024. So they're going to quadruple the world's supply of polysilicon, not China's supply, the world's supply of polysilicon, which means they're going to flood the world with polysilicon. They're going to drive the price down, and that will have enough manufacturing capacity to see the world increase solar installs by 400% within 3 years. And that's my forecast. And that's why I think the IEA is wrong. The IEA says we'll keep going at a plateau at current levels. Bullshit. We're going to see solar installs quadruple, and China will drive that. They will drive the price down until the uptake occurs. So look at what China does, not what fossil fuel or Westerners say about China.
Yeah, thank you, Tim, for your detailed response to my questions. I'll take another couple of questions together. There's a question from Rohit, which maybe you, in a sense, already partly responded to. And if he wishes to come in himself, he could do so, because I think would put it sharper than he has in the question. He's here, and then we'll take Ramana's question. Rohit, I'll ask one moment, and you sort of get to that. Second, it's also in your chat box here. Rohit, sir. Yes, Rohit sort of asks a question about the talk gives impression that the capitalists themselves and capitalism for selfish reasons obviously are providing for a greener and sustainable alternative through financial investments. Isn't this a bit too optimistic? And he says that it's probably a devil's advocate kind of question, and not true for you to in any way. It doesn't mean to sort of take it otherwise. But in case you wish to respond to that, maybe partly already have. But I'll also bring in Ramana's question. MV Ramana says this question that you may be asked time and again, will the variability of solar and wind power limit their growth? At what point, and will ways of dealing with this variability, especially storage technologies, manage to reach an adequate scale of deployment by that point in time? Could you take both questions together, Tim? Thank you.
Yeah. Am I too optimistic about billionaires and capitalism? Probably. But at the end of the day, I was trying to emphasize the self-interest of these billionaires. At the end of the day, they have to live on a planet and there is no alternative. Okay, Elon Musk might find a different one, but the rest of us have to live here. No, being serious, I mean, at the end of the day, I do see the power of capitalism as a key positive, because there's no other system that can mobilize the tens of trillions of dollars of capital that the world needs to see deployed at a scale unprecedented in solutions. And so an example of that, I mean, BlackRock, Larry Fink's letter is coming out, as I mentioned, in a week's time. I think one of the comments BlackRock Larry will make will be that BlackRock has now deployed $500 billion, and they've now measured it. They've been measuring it for a year. They set their target a year ago. They set their target of $1 trillion of capital deployment, and within 1 year, they're halfway there already. Now, they'll raise the target and they'll deploy even more. It's all about deploying capital at unprecedented scale and at ultra record low cost, because deploying renewables is deploying I won't get into the financing impact, but renewables cost of capital is half to a third of fossil fuel companies. And so the cost to consumers ultimately is lower. And so I do think deflation and lower capital costs, lower risks means the solutions will drive energy deflation globally. Maybe another way of answering that about billionaires being altruistic. Okay. There's an op-ed by the chairman of Fortescue, which is Twiggy Forrest, the richest man in Australia's company. And he's actually pushing back on exactly that comment, saying, look, Fortescue is a listed company. It is driven entirely by the profit motive. They've set the aspiration of being the world's biggest zero emissions energy trader in the world. And they see this as a massive profit opportunity. They want to front run it. They want to drive the technology. They want to seize the opportunity, and they want to transform from being one of the world's 5 biggest iron ore companies to being the world's biggest trader of green hydrogen. So they're talking about a financial opportunity. We need capital. We need it at an unprecedented scale. And I am a capitalist at heart. I do think you set the right policy framework. As the earlier question, you have the right externalities priced in. The carbon pollution has to be priced in, and then stand back and let the market solve the problem. The second question you raised, variability of renewable energy. That's partly why I sort of did that segue at the end on solar in Australia, and particularly rooftop solar in South Australia. And again, another shout out, my colleague Gabrielle Kuiper is online. Dr. Gabrielle Kuiper used to be the head of distributed energy for the Australian Energy Market Operator. And so she knows better than I do by a mile the impact of solar and the power and resiliency of distributed energy systems. So that comes back to heat as well. At the end of the day, Australia is a world leader in deploying renewable energies, and South Australia had 101% solar and wind delivery of its total energy system, and the grid reliability was fine. So, okay, you have to invest a lot of money to get the grid reliable. We will see deployment of batteries at an unprecedented scale compared to history. We will see the rise of pumped hydro storage. We'll see the rise of green hydrogen as a store of excess wind and solar. When there's too much wind and solar, we'll convert it into green hydrogen. That's about using the curtailed energy. At the end of the day, we need massive artificial intelligence. We need a smart grid. We need interconnectivity. We need to redesign the entire energy system of the world so that it can handle the future. South Australia is an example to say it's happening. It's happening far faster than anyone thought possible. And all the engineers, politicians, and fossil fuel climate science deniers have been proven wrong. The South Australian grid didn't fall over when we had 100% renewable energy. So I'm pretty optimistic. put the right frame in mind, put in the right price signal, have a peak power price and a time of day price in India. That's a key thing Vibhuti Garg's talked about a lot in her written research in the last 12 months. We need a price signal. Solar is by far the lowest cost source of energy when it's sunny. We need a time of day price to value power supply when peak power demand occurs. Artificial intelligence, smart grids, there are all sorts of solutions we could talk to. Batteries will be part of the solution, but the grid will be completely different in a decade's time to what it is today. And that's partly why I think there are synergies between what IEEFA does in Australia and India, because Australia has some really good examples. India is a world leader in deploying solar at scale, unprecedented. And I think there's a lot of compatibility for us to learn from each other.
Nagaraj, can I ask you a question?
Yeah, Sanjay, just take a couple of questions that are there already, and then you could come in just to go in the order.
Okay.
Okay. Yeah, just hold on for a couple of minutes here. So quickly before we go on to Sonali has come in again with a specific question, Tim, in response to your reply earlier. Specific question, she just asks, whether the issues of biodiversity get discussed at all in the corridors of high finance. She says you're probably saying it doesn't, but in case you wish to respond before taking on a couple of other questions, which are probably linked to a question that had come earlier, where one respondent participant asks again about, about the, let me just get to that one moment. Okay, for the moment, I'll get to Sumati's question. Sumati asks, why should we imagine that capitalists will be there to rescue us from climate disaster? Have they solved the world's food needs, for example? And why would climate change be any different? Isn't it a way to capture the market and grab, maybe she means sidetrack the real possibility of social justice? Yeah, Lavanya had sort of said something which linked to what was, I think, asked earlier by another participant. She says it's a great talk, but are we not taking government commitments at face value? So,
right. So I will just stress, I'm a finance expert. I'm definitely not a sociologist or a biodiversity expert. And I'll start by, I am optimistic. I do think finance is going to have to play a key role. It will play a key role. And just to stress, I mean, there's no other, there's no social or community group that can bring $100 trillion of capital to solve this problem. Finance has that money and will deploy it if the price is right, if the risk return is right. And that's why I'm optimistic, because people like Larry Fink, they don't care about climate change. They care about their own business, but where they can actually win kudos and, more importantly, win trillion-dollar mandates to deploy more money, and they can make more money for themselves and for their shareholders. It's about alignment of interest. Capitalism has plenty of warts. I'm very, very aware of that, having worked in capitalism for 30 years in the financial markets. But at the end of the day, we're not going to change the capitalist system. I think there are plenty of reasons to do so, but I'm not advocating China's political system in any way either. They're outside my bailiwick. They're outside my areas of expertise. If you want to campaign against capitalism, go for it. Good luck. I think we need it. I think the wealth inequality is getting worse by the year, but I'm working within the current framework. We have a capitalist system, and we have supposedly democracy in Australia and in India and America. It's under threat. There are plenty of pressures. I agree. There's plenty of reasons to be wary and be skeptical. But at the end of the day, I'll also say on biodiversity, does finance think about biodiversity? Not at all. To be brutally honest, there is no profit motive associated with biodiversity. We need to pressure our government. We need to speak up in all sorts of other forums outside of finance. Finance is solely the domain of profit maximization, profit risk. maximization. So risk-adjusted profit maximization, unfortunately. So we need to pressure and hold our governments to account so they set the right framework to protect and enhance biodiversity. They're failing in that, and therefore finance is definitely no panacea for it. Finance is totally amoral. 20 years working in the biggest financial institution in the world taught me finance is totally amoral, but probably immoral as well. And that's why I do the work I do now. Billionaires are just as amoral as finance. So it's more about, again, deploying capital at an unprecedented scale. And so when Ambani can deploy $100 billion, I'm willing to ignore plenty of downfalls associated with what the Reliance Industry Group's done, because they have the management capacity, they have the political clout, and they have the financial means to deploy that sort of money. And we need it deployed in India at that scale. So I'm going to cheer on Ambani for all it's worth. As to government pledges being hollow, that is absolutely a real risk. As to finance pledges being hollow, that is a real risk. But that's partly why I mentioned the Office of the Current Comptroller of the Currency in the US, why I mentioned the SEC. The SEC is saying that if you greenwash climate credentials, the SEC will hold you to account. Now, while we have President Biden in the White House, I'll hold the SEC to those words. If Trump comes back in, all bets are off, because he's as immoral as the billionaires. So at the end of the day, I'm saying the rule of law applies still in financial markets if the SEC is willing to apply it. And the SEC is the most powerful regulator in the world, bar none. And when the Office of the Controller of the Currency combined with the US Fed, combined with the SEC, get out of the way, even Larry Fink will not take them on. So I'm expecting regulation and punitive enforcement of laws and the court system to hold finance to an account necessary. Maybe it's optimistic. No, there's no maybe, it's optimistic.
Nagaraj, can I ask my question?
Yeah, Sanjeev, just 1 second. Tim, did you respond to the biodiversity question, or did I miss your response? There was a question whether biodiversity from Sonali, the biodiversity is sort of discussed within the halls of finance. Is that a concern among?
I did touch on that. I mean, it's outside my domain as Sonali.
Oh, sorry. Okay.
Yeah,
Okay.
Finance
Let's
is
go.
not going to be the solution for biodiversity loss. No.
You want to, yeah, Sanjeev, please come in. Yeah.
Tim, I want to take you outside your zone of comfort by asking you bluntly, do you think capitalism will survive?
Sanjeev, it's a good question. If you'd asked me that a decade ago, I would have said absolutely. Now I'm with you. I understand why you ask it. And I mean, this is a teachers forum. You guys are all very, very socially conscious people. No one in finance is really very socially conscious. That's why I left the world's biggest bank. And are there more warts? I was never, I mean, to be honest, to your question, I never met an environmentalist in the 20 years. I was managing director of the biggest bank in the world at the time. I'd never met an environmentalist. So no, is finance going to all of a sudden grow a moral compass? No chance. We've got to force our governments collectively to set the rules, to set the policy framework. We have to get the communities speak loud and clear so our politicians work for us, not the fossil fuel companies. In Australia, I've given up. That's why I look at India. I think there's far more chance of us winning that discussion in India. The Australian government is wholly owned by the Australian fossil fuel industry. Whereas in India, I think Prime Minister Modi understands energy security is the biggest threat to India, along with air pollution, along with water stress, and renewables can help solve all of those issues. So fortunately for you, I think India is far more open-minded than my country, and that's why I focus on India. I'm not just speaking to the audience. I focus on India for that reason. I am very optimistic. Energy security drives Prime Minister Modi. Economics drive Prime Minister Modi. Prime Minister Modi understands that global capitalism will deploy hundreds of billions of dollars of capital into India, into these solutions, if he keeps the framework in the policy that he's got today. And so it's a win-win-win. It's a win for investors. It's a win for the world. It's a win for the consumers, and it's a win for India.
Thanks.
Thanks, Sanjeev. Sorry, you're on mute.
Okay. I think that brings the questions and comments to a close. In case I've missed any questions from anybody, please do come in. But I would thank Tim for the detail and patience which you responded to all the questions and comments. Certainly the transition that has begun over the last few years certainly seems inevitable. I think what's also important as those engaging with the climate crisis is the pace at which it happens, and also how it takes along all social forces who depend in different ways on the energy sector, including workers and so on. But as far as the pace is concerned, I think this talk was in that sense very encouraging, because I think it shed insight into the speed and what you call the acceleration with which energy transition is going on worldwide, and also in specific different countries that Tim drew our attention to. I'd just like to end with a comment that Vidya Dinkar here, she says she thanks you, Tim, for the infectious optimism which is direly needed, even as we seem to be sort of, in a sense, facing difficult struggles on the ground against fossil fuel projects. But truly, that optimism is very much needed in our work. And so is the kind of informed reports and opinion that IEEFA, you and the IEEFA bring out. So it would be good if we were to be in touch, Tim, with IEEFA as TACC, and if your reports were sort of circulated well, and I would request Praveen also to play a role in that, to sort of circulate IEEFA reports as they come out, if you could be in touch, and so they could be circulated among teachers and students here, so we can have a more informed kind of understanding of the various facets of the energy transition that's going on both in India and worldwide. So Tim, once again, thank you very much, and please do stay in touch with us. It's been a pleasure.
Thank you very much for your time, and sorry for going on too long, but very much appreciate the opportunity.
No, I think that was great and very, very interesting. Thank you. So let's take that. Thank you all for joining us.